We will get quite a pullback at the start of the session. Around 70 points lower is where we're at on the SGX Nifty.
Only a close above the prior high, which is 44,151, which is also pretty much the all-time high, will confirm further upside.
Keep a 40-50 point stop loss. You get stopped out on the downside, but maybe risk reward could favor the bulls in today's trading session.
We think FY24 is also going to be a good year for CV industry.
And the first tick on the Nifty is a cut of 50 points, and on the sensex it's lower by 180, 190 points.
You're not getting that extra momentum, from global markets at the moment.
Q4 typically have lower volumes heading into the new financial year.
The resilience of the global financial system has been severely tested in the recent times.
Let's bring up the mid-cap index, and you can see that once again that's holding very solid.
Dixon Tech, like other EMS companies, have reported a really good set of numbers.
The Biocon group is poised for a very strong growth ahead.
2/3 of our production is from Chhattisgarh, and monsoon is a big dam.
So the Nifty is down by 40 points. It has seen some more selling pressure from the top.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell. We're coming to you live from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleagues Surbi and Rima here in the studios. Guys, hi. And of course, Nigel is joining us from the newsroom floor as always. Guys, Nigel, hi, good afternoon. So it's kind of difficult to say today whether the bulls have it or the bears have it, because you're off a little bit from the highs, you're off a little bit from the lows. Although at this point in time, it's more off from the highs than the lows. I mean, the Nifty is about 100 points, almost 100 points off the highs, and we're about 40 points off the lows at this point in time. I mean, it's not a decisive day on which one can read into for lots more insight or what's to come next. I mean, it's not that kind of a day. There are no real signs coming off the screen about what the market wants to do next. But we've given up gains by quite a bit. Off the lows early on and then off the highs a little later in the session. Now, the support level for the Nifty comes in at 18,199. That's simply the 20-day moving average. And that is about 200 points away from where we are, about 100 points away, beg your pardon, from where we are right now. That's the reversal. I've been saying this on the Nifty, Bank Nifty, both. And on the Bank Nifty, that's the 20-day stands at 43,511. These are your trailing reversal levels, stop levels that you want to keep. And of course, I mean, closer to it, if you want to test the waters, I mean, those are the best risk rewards to try and take support and for the market to bounce as well. But a close below these levels, I think, is what you don't want to see. Broader markets are in the green, but advanced decline is a clean 1:1, so not very much happening there. And of course, I mean, headlines around the debt ceiling will remain important, and be sure to hear a lot of it, especially in the US market session as we get closer to it in the evening. And of course, there are FOMC minutes as well, which I think will be important, but they take a backseat to what happens on the debt deal. Global markets, Rima, are also in the red, right?
Quite a dizzy right now. So frontline European indices are down close to about 1.5%. We're talking about the CAC, DAX and the FTSE, and they've opened sharply lower. 1.5% gone on the benchmark indices there, as investors are waiting and watching for progress on the debt ceiling talks. That said, the Indian market's performance over the last couple of days is fairly resilient. I was just taking a check on the week-to-date performance. That's Monday to Wednesday. The Nifty's been up 0.6%, while the CAC and the DAX are down 2.5% to 3.5%. The Hang Seng is down to 1.7%. The Chinese markets are down 2.4%. So the point is that despite all this turmoil that we're seeing in the global markets for the last 2 days, the Indian markets have actually been fairly resilient with a gain of about 0.6%. Another concern which has been added on is the fear of a fresh COVID outbreak in China. There are talks about some 65 million weekly cases, and that's raising fears about the possibility of demand getting hit over there. Commodities are taking it on the chin, consequently, given all this weakness in the global markets. The Nifty Metal Index, after a big run up on Monday and Tuesday, is currently down over 1%. That's the Nifty Metal Index. Adani Group stocks, particularly Adani Enterprises, it had a 40% run up over 3 days, but today it's now seeing some profit booking. The big drag is coming in from HDFC Bank. So HDFC Limited and HDFC Bank is dragging the financial stocks lower. In fact, the Nifty Banking Index itself is down about 158 points, out of which 125, 130 points is courtesy HDFC Bank. The Nifty Bank contribution plate will show you the impact that HDFC Bank's fall is having in taking down the Nifty Bank. Pharma, on the other hand, has moved to the high point of the day. In fact, across the board, the numbers have been fairly strong, from pharma companies. Only Sun Pharma and Torrent Pharma are left to report. But, I was reading some Nirmal Bang analysis, and their research shows that for all the pharma companies under their coverage, US revenue has gone up 15% in constant currency terms. The India business has gone up in double digits, 10 to 11%. So pharma has actually clocked in a very good performance Q4 so far.
And positioning and timing is everything in the market, right, Rima? You have a sector that's been under-owned at a time, good numbers coming in at a time when there's a lot of uncertainty. And perhaps it just explains how money has been moving into the, the all-time, we used to be an all-time favorite safe haven in the market. On the European markets, just the issue is, of course, this debt ceiling chatter, which doesn't seem to be getting resolved as quickly as markets had perhaps penciled in. So some of that nervousness is in place. And Rima, I just want to throw one more number at you. Inflation data is out in the UK. The headline number is better. It's much better than 10% or it's 8.7%. But, core inflation has inched up. And food and non-alcohol beverage inflation in the UK is 19%, 19. And that's a sobering thought, right? So it just tells us that things are far from sorting themselves out with respect to the entire, rates and what's happening with monetary policy tangle. Anyway, that's the global picture, which has led to a fair amount of caution in our market. I just want to point out 2 or 3 moves in the mid-cap arena, and we'll talk more about these stocks as we go forward, because again, today is a day where at the headline level, the Nifty is not making any headway around 18,400. But there are outsized moves in the mid-cap market. Pull up a Deepak Nitrite, pull up stocks like maybe a Schneider Electric. Some of these are reacting to numbers. Some of them are reacting to, of course, corporate developments. For Deepak, it was investment in Gujarat. There's a Polyplex. We'll speak more about this stock as we go on. Promoters are selling half their stake. There's not even an open offer being triggered, and the market's quite upset. So very big outsized moves in the mid-cap market are the hallmark of today's action once again. Nigel, but I guess this 18,400, it's really proving to be formidable for one reason or the other.
Well, we mentioned this morning, right? So you require a bigger push or a bigger trigger. I don't know whether it's a debt ceiling or maybe it's a dovish Fed. I don't know what we could expect. I have a couple of triggers, right, going ahead. You have some uncertainty in the global markets, which is a bit of an issue. 2 factors out there, the debt ceiling and what the Fed will do. And the problem here domestically is we're getting to that monsoon season. And the fear is of a lower than expected monsoon. So that's the other problem that's plaguing us. For the time being, though, this morning the trade was pretty clear. If you get a dip, you look to buy into it and you'll make some money. And if you did that, you would make some money. But that trade got over when we went closer to around 18,400. And as you mentioned, the bears did come in to defend that mark. So again, we're in that range. But the morning trade really played out perfectly for the bulls itself. But how do you position yourself in the final hour of trade from here on? Well, Mitesh is back with us to give us his take on the index. Mitesh, well, if you didn't buy in the morning, you would not be feeling too bad, actually, because the markets are almost back at those levels. What's your view? Where do we head from here? Tomorrow's expiry as well. On the upside, or do we see a bit of a correction from here?
So, I've been advocating against taking long positions purely because the Bank Nifty wasn't confirming that there could be a breakout happening. And I'm still waiting for the Bank Nifty to clear 44,150 and the Nifty to clear 18,420, 450 zone. I think once that happens, we'll have a breakout. Otherwise, we are still consolidating, and therefore, buying at the upper end of the range would not have made much sense. You could have been stuck at higher levels. So, given that kind of scenario, the risk reward was not very favorable to take a long position. So we avoided it, and the view still remains same. Either we see the Bank Nifty get past 44,150, or we see the Nifty and the Bank Nifty decline a bit, and then on lower levels around the support areas is where you would want to buy. Having said that, right now I have one buy and one sell call. Cummins it's come off again, but Jindal Steel and Power is on the sell side. That's a stock, which is now trading below its 200 average level. So keep a stop just above today's high of 521 and look for a target of roughly around 495 on the downside to begin with. We can even maybe look at eventually lower levels. And the other stock to buy is ONGC, which I would recommend buying with a stop at about 163.5 for targets of 172.
Okay, thank you very much for that. ONGC and Cummins are the stock recommendations. Hindalco just reported the Q4 numbers. Nigel, the details?
Well, the numbers actually are good from Hindalco. Remember, first things first, on the total operating profit of Hindalco, we already know 70% because Novelis already came out with a set of numbers. So basically, we're analyzing the remaining 30%. For Hindalco, we look at three big numbers. One is on the aluminum EBITDA, the copper EBITDA, and the debt. Let's take the first factor. Before that, just talk about the volumes. They're more or less at optimum levels in aluminum, so that was more or less in line. The copper volumes were better, came in at around 117,000 out, so that's a thumbs up out there. But focusing on the three broad numbers, the aluminum business, we were working with around 2,050 crores odd as an EBITDA number. It's coming at around 2,300 crores. We're talking about downstream and upstream put it together. So thumbs up out there. The copper business as well, TCRC margins have improved a little bit. And also volumes are higher. And that's why the copper EBITDA, that's improved to around 598 crores. We were working with a number of around 530 crores. So that's a good 10% beat out there. I'll tell you what, just a few quarters ago, we were debating with Mr. Pai of Hindalco whether or not they can maintain this, 350 crores odd. So that's reported a marked improvement. And finally, the cherry on the cake is the debt reduction number. It's to the tune of close to around 7,000 crores. But remember, 5,800 crores out of that had already been reported in Novelis' numbers. There was working capital release, and it appears whatever minimal debt was there on the standalone business, that's got repaid as well, which explains why there's such a stark debt reduction. The problem is China is still uncertain. There's still some global headwinds, and that's why the stock is not reacting that much, but it recovered a goodish bit from the low point of the day. Dipan Mehta is with us. Dipan, I know metal's not your favorite, but Hindalco at around 400, I mean, is it getting into that zone when Dipan will give it a second look?
Yeah, good afternoon, Nigel, and thank you for having me on your show. Not really, unless you're putting words in my mouth.
No, Dipan, I know you're not a fan of the metal stocks, but I just thought that, maybe at some level you'll get interested. The stock, remember, was 550, 600. So, but you're not interested still, huh?
No, not really. And, you said the very interesting thing that almost 70% of the revenues are coming from the international operations. And they're facing enormous, challenges over there. There are very strong macro headwinds. And overall, we should expect a slower US economy. And that's certainly going to impact the performance at Novelis. So there are just far too many uncertainties and too many challenges. So we'd like to avoid metals altogether. There are a huge range of companies which are the metal consumers. And you named a few of them. I think in your show today, Cummins is there, Schneider Electric is there. And there are many such companies which benefit from lower metal prices. I think that's where you need to be investing in. No doubt, I think there is always a trading play in the metal stock, but to buy them when they're absolutely underwater and there's blood on the streets, so to speak, for them. And when the prices of the metals are at rock bottom levels, that's the time to get into them. I don't think we reached that particular zone as yet.
Well, that rock bottom zone in the recent past for Hindalco was around 322, which is around, June of last year. Since then, of course, the stock had a good rally, and then it's been correcting all of this year thanks to some of these Chinese issues that have come back to the surface, whether growth really has been as robust or not. And now, of course, you have all the COVID worries in China all over again. Okay, so that's a stock on which we've had our first debate. Let's move to the other one, because that's also a great point of debate in the market, and I'm talking about Dixon Technologies. Now, for what it's worth, the fourth quarter performance has been good. The stock is reacting to the fact that the company has beaten expectations on almost all counts in the fourth quarter. So let's look at the numbers, and then we'll ask Deepan more about it. We have Surabhi with all the details.
Dixon Tech, like other EMS companies, have reported a really good set of numbers. Now, it beat estimates on all fronts. The revenue was up 4% on a year-on-year basis. They saw 100 basis points margin expansion on both EBITDA and gross margin level. And when you look at the internals, they have reported strong numbers there as well. The mobile and the EMS segment, which is the biggest segment for them, there they saw a revenue growth of 9% and a margin expansion of 70 basis points. On the con call, they did indicate that they have received large orders from Jio, and also volumes from Nokia has increased, which has led to a revenue growth in the mobile segment. The next big segment for them is the consumer electronics, where they have seen a marginal revenue decline of just 3%, but nevertheless the margins have expanded by 100 basis points. They said that the revenue was affected by higher open cell prices in the international market and also a weak consumer demand. Lighting segment saw some weakness, but this has been consistent with the peers. The revenue was down 11% over there. Home appliances and security systems both have seen a revenue growth and margin expansion on a year-on-year basis. All the brokerages have a positive view on this stock. Morgan Stanley, Investec, JM Financial and Nuvama all have a buy rating with a target price anywhere between 2,800 to 4,280 rupees per share.
Okay, so some optimism there on Dixon Technologies today. Deepan, now this is a debate because while some of the smaller, newer listings in this arena, right, which is more on the industrial side, your, Canes and the small company called Sirma SGS, suddenly they're catching the investors' fancy, whereas Dixon has really underperformed. Today's a great day, but otherwise Dixon's down 14-15% this year. Would you be interested in the space, A, and B, what kind of players?
Yeah, good afternoon, Surbhi. See, Dixon, the issue was that this quarter was very strong, but last couple of quarters have been a bit challenging. They have been impacted by higher raw material costs, and there's always a time lag between passing on those costs to their end customers. And of course, the valuation, I think it's really richly valued because it caught a lot of excitement of investors because of the whole PLI scheme. And this entire manufacturing of mobile phones within India is certainly a very strong value proposition. But I think maybe the stock has run up a bit ahead of itself. And thankfully, investors had this particular quarter numbers where clearly it is showing that the company is moving up the value chain. And the products that they are focusing on are the ones where there is a higher EBITDA margin, which is very positive. And I think if this trend continues and stock price remains at these levels, so you have a compression of the price to earnings multiple, then it may get into an interesting investing zone. For the time being, I think if you're invested in it, as we are as a disclosure, I think best to remain invested. The opportunity is massive, considering the kind of market which is there in India and globally because of exports. We also talk about China Plus One, and Dixon is a major beneficiary of China Plus One strategy of global MNCs as well. So it's a good investment story, good investment theme, but it's just that on valuation, there is hardly any comfort.
Okay, and when we spoke with Amber, they said an interesting thing, and this may be in a way an underappreciated risk as well for these companies. These are contract manufacturing companies which assemble, put together ACs, refrigerators, all kinds of things, electronics basically. They said that a lot of companies now, who are their customers, because of these PLI incentives, they themselves are putting up their own manufacturing capacities. And what that means is that instead of assembling the entire thing and then supplying it to the OEM, whoever that may be, what they're trying to do is now to kind of sell these companies components. Now that is a higher margin business, but it's a transition which many of these companies perhaps will see over the next many quarters. Amber, Dixon, everything, all of them included as well. By the way, markets have taken a sharp dip. If we can have the Nifty up, we were talking about a 30-point drop. It's a 80-point drop now on the on the Nifty, and this is almost, it's a vertical slide starting 237. So which means that we're at exactly about 9 minutes ago, the slide started, and it's a very steep one, which has basically taken the market, I think, to the day's lowest point. Yes, we are at almost, not almost, but I think we are at the day's lowest point. The earlier low was made at open 920, 925 or so, and then the market bounced. So this is this second very sharp, swift sell-off, which is emerging. Actually, maybe just a quick look at the Nifty Bank as well before we take the break. I think a similar kind of picture, starting at about 237, 234, 235 or so. The Nifty Bank has also seen a very sharp move down. It's down about 0.6, 271, 272 points in the red. Deepan is with us. We take a break here. We're back. We'll also have Nilesh Doshi of Green Lantern Capital join us on the other side. Stay with us.
Welcome back. Frontline indices are selling off, but mid-caps are holding fort. In that, you've got a Deepak Nitrite with a gain of 9%. This is after the company has signed an MOU with the government of Gujarat. Sonal joins us for more on that. Sonal, it's a very large capex of 5,000 crore that the company is committing. Can you tell us more?
Oh yes, it's a big amount. 5,000 crore rupees is what Deepak Nitrite will be investing over the next 4 years. This is in an MOU or an agreement with the government of Gujarat. They will be expanding to newer products and also manufacturing existing products like phenol and acetone. The other products would be something in the specialty chemical space, bisphenol, and it will be done at their existing plants, the ones at Dahej and Nandasari as well. Now the company says the products which will be manufactured will be used in various segments. For instance, specialty chemicals will be used in pharma sector, it will be used in agrochemical sector. Bisphenol will be used to make epoxy and adhesives, which is a feedstock for polycarbonate, which is ultimately used in sectors like automotive, electronic, consumer goods, etc. The company goes on to say that these products will be important for import substitution, and that's why the stock is in focus. Just to put the point forth that it is important to track the execution here, because it is a cyclical industry in which the company works in or executes their projects in. So by the time this is executed, we'll have to watch out for what the asset turnover here is and what the opportunity they can get, considering the realization or the phase of the cycle they are in when it comes to their individual products. But yes, a decent news. We'll have to see the execution going forward and whether the stock price move that we've seen today actually converts in the kind of opportunity company is seeing here or not.
Thank you very much for that. Dipan, thoughts on Deepak Nitrite?
Yeah, I think it's been a great value creator, and the inflection point for the company came when its 100% subsidiary, Deepak Phenol, went on stream. And phenol, mind you, was an import substitute product. They have now a large-scale capacity within India and could even look at exports. On the whole, I think specialty chemical companies have reported good earnings, and the medium-term outlook also is pretty decent. This rupee depreciation certainly benefits them. And again, this is like a China plus one strategy, where global outsourcing is coming more and more towards India. So in that spirit, I think the company expanding its capacity is definitely well taken by the market. And valuations also are quite reasonable, I think. So around these levels, or maybe when the stock cools down a little bit, one could look at investing in, but have a slightly longer horizon.
Okay, slightly longer horizon. Deepan, any of these Adani Group stocks of interest to you?
Yeah, Prashant, that's a tough one to answer because, on a fundamental basis, they keep making incremental progress. But the valuation comfort is just not there when you compare it with other companies in similar businesses within India or globally. But then, it keeps on springing surprises from time to time. And now that, the kind of issues which were there a few months ago around the short seller report, I think those are gradually getting addressed. And we are seeing a lot of trading interest in the Adani Group stocks. And that also, I think, is lifting the sentiment for these companies. But on a fundamental basis, I'm still to get around myself to buy any of these companies.
All right. And I'm sure we'll hear it when you do it. Well, that's Adani Group and Deepan's views there. NCC is up about, 6% or so at 108 plus. It's seen a sharp recovery from where it opened in the morning. Vivek is standing by. We put this out with Vivek earlier today. CLSA, the broker, saying that they don't think, the Karnataka state government issue and the new government coming in and sort of freezing projects, etc., is a big deal for NCC. It's a small percentage of NCC's total workbook. Vivek, take it away.
Well, absolutely right. So yesterday there was a panic sell-off after, the news flow that did come in saying that, immediate stop as far as new project order wins. Also stopping, releasing of funds as far as some of the older project execution was concerned. But CLSA today morning had, done an impact analysis. So number one, when you're talking about NCC itself, the Karnataka government or the Karnataka order book stands at 11% of NCC's total order book. Now, even within that, what they said was that it is important to monitor jointly funded projects like the Bangalore Metro. For instance, in the Bangalore Metro, there is a percentage or an element of number one, the state funding, the central funding, as well as external organizations that were funding. So in most likelihood, even we had J. Kumar Infra on the channel, they also said in most likelihood, those projects will not have any impact whatsoever. In fact, what they're saying is that large projects like Bangalore Metro and Phase 2 was actually funded 50% from the multilateral agencies. So today morning's note, CLSA actually mentioned that it's actually a good idea to go ahead and accumulate the stocks on the back of yesterday's weakness.
Okay, and that seems to have worked for NCC today, 6% higher. Vivek, thanks for that. After a stellar move, 70% up move in the last 1 year. It's been quite a story, NCC. Deepan, your thoughts on this, whether you're convinced that this is really a non-issue and whether you would have an interest in an EPC player like NCC?
I think it's a non-issue, and even if the percentage of exposure to Karnataka was high, it's just a transient phase. End of the day, I think at this point of time, the way infra projects are coming up, the government needs more companies like NCC, be it state or central, and companies like NCC, which have a proven track record in execution and are eligible for many of the high-value projects. I think this is great times for them. And look at the order book which they have. It extends easily beyond 3 years or so. And we are entering into a kind of a election phase, which will mean more and more announcement of infra projects and a greater urgency to complete the infra projects already underway. So on the whole, I think NCC and similar group companies or similar peer group companies should do exceedingly well. Of course, Larsen & Toubro is the absolute ultimate large company when it comes to infra construction. And they too have reported good order inflow. So very positive on the sector as a whole. I think next 3-4 quarters should be phenomenal for companies like NCC or Dilip Bilcon, KNR Construction and Larsen & Toubro as well.
Okay, all right, Deepan, thanks so much for stopping by and discussing a whole host of stocks with us. Well, the markets seem to be in a bit of a mode where we're seeing selling pressure at higher levels and maybe we're in a bit of a range. So our next guest then becomes quite important. Mr. Nilesh Doshi, CEO and Managing Partner at Green Lantern Capital, joins us on the show. Hi Nilesh, good afternoon. Thanks so much for joining in. This is the first time we are speaking here on the channel. Well, I was looking at your fund performance and it looks like you've outbeaten the benchmark index, both on a 1 year, 2 year, 5 year basis. So it's going to be a value pickers market, right? Tell us, what is this couple of stocks that you'll have increased allocation on, or maybe a couple of stocks where you'll have just got into, and give us a rationale on that.
First of all, thank you, Nigel, for inviting me on the show. And as you said, yes, we did a very good performance over the last few years. The way we approach our investment strategy is, apart from bottom-up approach, we typically tend to identify the trends of sectors where we see a lot of capital allocation is expected to happen. And that also helps us to buy stocks at very good margin of safety and extremely favorable risk reward. So to give you an example, that somewhere in 2021 mid, we got very positive on the capital goods sector. And we have a really good investment. We made a good investment in capital goods sector. That has actually outperformed us. Apart from that, we also entered into banking at that point of time. And simultaneously, at the end of 2021, we exited our exposure into pharma and IT. So when we work with a risk-reward pattern, and wherever we see that the revenue, the second derivative of revenue, basically the rate of change of revenue and the earnings, whenever we see it as very favorable, we do look at those sectors and we enter into the stock. And on the other side, we do exit those kind of stocks where we feel the valuations are extremely high and probably most of the earnings growth as well as the EPS growth is captured in. So to tell you in terms of stocks, in the past, we have definitely invested and at the right time stocks like ABB, Cummins, Helicon Engineering, LG Equipment, some of the banking stocks also we played at that time. And probably these kind of stocks have really helped us to navigate the volatility in the market.
Nilesh, afternoon, Rima here. Exide is one of your top holdings. Now, generally, auto ancillary companies have reported good numbers because they're coming out of a long period of a downturn. Stocks have been consolidating, not done too much. Amongst all the names, can you tell us why you've picked Exide?
A very interesting question. The whole market was basically positioning Exide as a lead-acid battery and the terminal value of this business to be zero. Whereas we took a little different call after doing a lot of analysis. We felt that for a little longer period of time, the lead-acid as well as lead-acid battery business will survive, at least for next 12 to 15 years minimum. And we are seeing incrementally the sales of vehicles, what we see in India, it is still fossil fuel-based sales, which is picking up. So in India, because of the infrastructure issues on the charging side, we felt that lead-acid battery business is not going to go away. And therefore, that was a fantastic cash flow from point of view that this stock was very cheap. Now, having said that, if we eventually get into the lithium-ion batteries, obviously we will need a manufacturer of these lithium-ion cells in India. Also, we will need a manufacturer of battery pack along with battery management system to supply to the OEMs based on their requirement. And there we figured out that Exide is, this company is basically way ahead of all other competitors in India. In fact, they have been the first one to get into battery pack manufacturing, which is the final product that goes into any vehicle. And finally, we also realized that in case of electric vehicle, two-wheeler and three-wheeler is the first one which will catch up. But four-wheeler, definitely there is going to be a lot of time to catch up in terms of electric vehicle. Whereas when it comes to CV, I think electric vehicle may not be the future. It may be probably the hydrogen fuel cell or hydrogen engine. So keeping all that in mind, we felt that Exide was, this company was available at extremely low PE.
Aren't they also going into lithium-ion batteries, etc., apart from the core lead-acid segment? We, by the way, Nilesh, afternoon, Prashant here, we spoke with the Amar Raja management today, and they're also building out the lithium-ion, they're building a new manufacturing facility. They've just laid the foundation stone, and they plan to invest big in that segment. I think Exide is also, so while all these companies concentrate on what is selling now, but they're also, I think, trying to build products for the future, if that is indeed the future, although you're saying that is not the future.
No, absolutely. I'm not saying that is not the future. I'm saying there's going to be a time lag towards maturing the electric vehicle space. Right. But at the same time, the investment has to start from today. And as you rightly said, Exide is probably ahead of everyone in the country to get into lithium-ion battery manufacturing. And they're already into the final product which goes into the vehicle called battery pack. They're already into battery pack manufacturing. In fact, if you see the current result and their call, they have already received an order of 700 crore to supply battery pack to OEMs. So in our view, electric vehicle will happen, but I think there's going to be a time lag. Secondly, Prashant, as you talked about the battery pack, there is also a requirement of huge amount of batteries for the storage, energy storage, because without energy storage, probably renewable solar and wind, in our view, will not be a viable proposition on a sustainable basis for the entire country to be converted into. So as you want a renewable energy, the future energy supply should come from renewable, then storage of battery energy is also going to be a very, very key component of the investment pattern. And that is where, again, the lithium-ion batteries play a very crucial role today.
Okay. I want to come back, Nilesh, to what Nigel started with. I'm looking at the performance of your fund over the last 5 years versus the benchmark, and I mean it's a significant outperformance. By the way, Nilesh, what is the size of the fund now, and how are you organized as a structure? This is a PMS.
This is the PMS, and our we started about 5 years ago, and we have been growing this fund organically through friends and based on our performance. So currently we have crossed about 100 CR in our PMS, and the team what we are, the partners what we are, we all come from a very strong research background for more than 15-20 years in the industry. So that's how
and I was seeing that
team consists of, and that's how we are operating.
Yeah, no, you worked in. I'm assuming early in the career, you worked in some consumer companies as well. So before getting into so that's always interesting. So what's the new idea? I mean, which incrementally you are kind of buying on dips or you're accumulating, Nilesh?
Yeah. So Prashant, as I said in the beginning for our strategy, currently we are seeing, as you are aware, that the renewable energy is going to be a very larger component of energy chain in our country, and the government is no more promoting thermal energy to meet with the ESG guideline globally and carbon neutrality. For this renewable energy to be in place, we are very positive on solar and wind or an hybrid. We are positive on the storage of energy. We are positive on the transmission area, because you will have to modify a lot of your transmission capabilities to absorb this volatile energy which is coming out of solar and wind. So these are the areas where we see a lot of capital spending has to happen over probably next 5 to 7 years. And the kind of spending, it has to probably more than 3 to 4 times what we have spent in last decade.
Okay, well, Nilesh, good to have you with us and good making the connect. Appreciate you joining in on CNBC TV18. Thanks very much. Well, we'll take a quick commercial break here. On the other side, we get you the short-term trading ideas with our technical experts. A little after that, we'll get you a quick global perspective as well. Global markets are looking a little shaky. Stay with us.
Welcome back. Here with us on Closing Bell, and we're looking at global markets because things are a little volatile with a negative bias. Most of the European markets are down between 1.5% to a little over 2% in some of the peripheral markets like Italy, for instance. And this impasse on the US debt ceiling seems to be really playing on everyone's mind. There you go, 1.7% lower on the CAC. Now, we have Craig Earlham, Senior Market Analyst at Wanda now with us. Craig, thanks very much for taking this call. I guess up until a day or two back, global markets were taking all this chatter on the debt ceiling, all of this, political posturing in their stride. But now things seem to be changing. What exactly is the market pricing in at the moment? And do you expect more volatility?
I think it's a combination of factors. The debt ceiling is front and centre right now, but I don't think anyone seriously thinks that's going to go badly. We may see the deadline pushed back from the 1st of June. There's a lot of talk now about the 6th of June. So we could see negotiations last a little bit longer, but we're not going to hit the debt ceiling. There's going to be no default. That would be a catastrophic piece of self-harm from the US, and it would have ramifications for global markets and long-term implications for the US as well. So that's not going to happen, but we could potentially see that play a little bit into risk appetite in the broader markets, just pricing in the risk of what if rather than the risk of what's likely. I think there's a good thing that's playing a role at this point in time, and we've had a little dose of it today in the UK. We are seeing signs that inflation could be a bit stickier, and the UK inflation data today not only showed that headline inflation didn't fall as far as expected, but it actually showed that core inflation rose unexpectedly by 0.6%. And when you combine that with some of the more hawkish commentary you've had from certain central banks, with the commentary from some central bank policymakers in the US talking about 2 more rate hikes rather than a rate pause, then suddenly we're in a situation where I think investors are trying to square this circle of how much more tightening is there going to be, what is going to be the economic ramifications, and is current forecast too optimistic about interest rates later on this year going into next? Is this going to be a longer-term problem? And that, I think, is what's really tipping the balance currently.
In fact, even former,
Sorry, Eric said, sorry to interrupt, but Eric said there's a what-if question, right? There's a very popular book called What If. It has it answers ridiculous questions like what if the oceans all dry up together? What if the moon comes closer to the earth? And what if computers take? I mean, not all ridiculous questions, but outlandish questions. And I think
computers taking over the planet is already happening, Prashant.
The question, what if the US defaults? I think fits right exactly there. I mean, I remember in 2004, 2005 when this, when I started, first heard this question, someone said, well, we can all head to the hills if the US defaults. It's never happened before. They've always honored their debts. And I think Eric is absolutely right that no one in this right mind seriously thinks that's going to happen this time around as well.
So, Eric, the bigger concern right now... Craig, sorry. Craig, do you think the bigger concern right now is the possibility that in the June Fed meeting, we are not going to get a pause? Because yesterday, we had former Fed Chair Ben Bernanke also saying that the central bank has more work to do to control inflation. So do you think that's the bigger worry for our markets, that even once we get a resolution on these debt ceiling issues, markets will still be a bit nervous?
Yeah, I think it is. It's not just June as well. I mean, June we could get a pause, and then the following meeting we could get a hike. I think there's always a lot of focus on the next meeting, looking for strong signals. But for me, the most important thing is the next 2 or 3 months. And the reason is we're now at the anniversary, or just gone past the anniversary of the invasion of Ukraine. And that's when we saw, obviously, a lot of movements in commodity markets, etc. We've seen a lot of inflationary impacts of that. And therefore, now that we're starting to get the April, then the May and June data through, that's when we start to see more favourable base effects. So the surge in commodity prices start to fall out of the equation. And we start to see what real inflation is, longer-term inflation is looking like, and how stubborn it is, and how more ingrained it is. And it's the ingrained aspect which I think is going to become much clearer in the next 2 or 3 months. And I think that plays into the anxiety that we have here, is that if, like we're seeing, for example, today from the UK data, if it looks as though this is something that's becoming a little bit more ingrained, then that has massive implications in terms of what kind of growth prospects we have and how long interest rates have to stay high for. There's a lot of focus on the terminal rate of interest rates, but for me, it's the time factor. There's a big difference between what the markets have been pricing in, which is the terminal rate for 2 or 3 months and then ongoing rate cuts going into 2024, and 12 to 18 months of a terminal interest rate, which, if inflation remains sticky, is something that could become a potential outcome. That could have massive ramifications as far as the global economy is concerned. And that's the part that I think is really troubling investors and will do for the next couple of months.
Oh, absolutely, Craig. For a lot of investors, it was sort of a happy, understanding that you go into a bit of a pause and then you start looking at rate cuts. But if inflation continues to be sticky, then you are in for a disappointment there. Just finally, before we let you go, from where you see things in your part of the world, is China a talking point at all? Is that another issue that we need to perhaps put on the worry list because of the high COVID cases there, and B, even if you're looking at commodities, metals for that matter, there's a lot of price destruction that's going on because it seems that the reopening, buzz and the reopening expectations, the reality is not as strong as what those expectations seem to put on the table.
Yeah, with China, there's a number of different focal points really that we can look at, and there's also different knock-on effects from what could come from it. So, if you just take the reopening as an example, we were expecting it to be quite strong, and it turned out initially to be even stronger, and then it seems to have cooled very quickly. Now, there's two implications to that. One of which is lower growth means that we're not going to see that supportive growth force for the global economy. But the other side of it is on that demand side, at least in the short term, is that we could see lower demand for commodities and therefore lower potential inflationary pressures, although we are seeing still a lot more focus on the services side of things. So that's one aspect. Then there's the other aspect, which is the relationship with the US. Of course, we're seeing still these kind of tech-focused tensions between the two. What impact does that have in terms of growth, in terms of the kind of global cooperation? And then, of course, there is what we've seen more recently, which is its relationship with Russia. We're almost seeing this global divide into powerhouse nations, into two large teams, as it were, with China coupling up with Russia and Iran, etc., and then the US and elsewhere. What does that mean for globalization? What does that mean for global growth prospects? Because deglobalization, in its very nature, is a growth dampener, and therefore that's a big thing with China as well. So there's so many different angles with China right now, starting with growth, but also everything else which we've just touched on, all of which seem to nod towards being weaker as far as growth prospects are concerned.
Okay, all right, Craig, thanks so much for stopping by and giving us your quick take on how the entire global dynamics are panning out. On the Nifty, we continue to trade below that 18,300 odd mark. A few stocks, though, are moving around in the last few minutes. Adani Enterprises now is down close to around 6%. ICICI Bank, that's taken a big sharp downtake, and that's why the Nifty Bank is at the low point of the day. Just pull up the intraday chart of ICICI Bank, and the bigger boy in there in terms of weightage, HDFC Bank as well, has taken a leg down. How do you approach trade from here on? Mitesh Thakkar joins us to give us his buy or sell trades that he's got for us at around 310. Mitesh?
Yeah. So, Nigel, I have one buy side and one sell side trade. Loris Labs and a couple of pharma names are breaking out very nicely. So, Loris Labs has come on the radar. That's a BTST here. Keep his target about levels of 329. Look for 340 as a target for tomorrow. While L&T is something which might correct a bit. It's been a negative since the gap down happened post numbers, and now looking at closing at a fresh swing low. So that's a STBT with a stop at 21.95 for targets of 21.60.
Thank you for that. Cummins is a stock which has fallen 6% in trade, came out with numbers a while back. Vivek, numbers look pretty okay. So then what explains the fall that we're seeing in the stock?
Well, absolutely right. A while back, Cummins came out with its numbers. The numbers are a clean beat to our estimates. We had highlighted, even during the preview, that there could be an element of pre-buying that could happen before the new pollution control norms come into effect. And what we are focusing on right now is the kind of commentary that the management has given. At best, it can be described as soft. So the CPCB 4+ norms actually come into effect from July 1st, 2023, and these are for diesel gensets up to 800 kilowatts. So this is where the company has the highest focus in. So what the company is saying is that the power generation market will now evolve based on these new emission norms, and they are saying that this is going to be a challenge going forward. That while the company is prepared with higher priced products to meet these new pollution control norms, they are saying that at this point of time the outlook is still uncertain. Other than that, another uncertain element as far as the management is concerned is that they are saying they are facing continued supply chain challenges, especially for specific electronic as well as other components. So at this point of time, they are saying that they're just cautiously optimistic about the short to medium term demand outlook. Even more importantly, the company has actually refrained from providing any guidance for FY24 at this point of time. Now, when you're comparing it to the other capital goods companies, it was definitely soft, when some of the other capital goods companies have given a much more optimistic guidance for FY24.
Thank you for that, Vivek. Get into a break. We'll come back with more on the markets.
Welcome back. Well, the markets have come off the high point of the day, but all is not lost actually. Select companies are still going to end at the day's high. You have NBCC, the stock has moved higher. It's currently at the high point of the day. Laurus Labs as well, after seeing a sharp correction, that as well is moving from strength to strength, so pretty good going. And TVS Motors, it was expensive, it is expensive, but it seems the street likes the story that they're putting out there in terms of their margin performance as well as the EV penetration that they're looking at. So that one as well continues to trade with good gains. Ambrish Palikar joins us to fill us in with his take on the markets. Well, Ambrish, I think you're feeling powerful today, or you have a view on a couple of power stocks. Fill us in with what's your pick for today?
Yeah, Nigel, good afternoon. My pick today is Tata Power. It's the largest integrated power company with about 14.1 gigawatts portfolio, in which about 37% is in fact clean and green capacity. And now with the expansion of the capacity to about 17 gigawatts, the clean and green capacity will in fact touch about 47% of the total capacity. In fact, solar and hybrid capacities are being increased from about 5 gigawatts to 25 gigawatts by FY30. So from an ESG perspective, Tata Power is not adding any coal-based capacity anymore. And I think by 2050, the existing coal-based capacities will be phased out. So by, say, about 2045 or so, it should be a carbon net zero. And focus is now on solar solutions, EV charging, other services like home automation, in addition to utility scale solar EPC. They're also setting up a 4 gigawatt greenfield solar cell and module factory in Tamil Nadu. I think that should be operational by about Q3 of the current year. They have a large customer base in transmission and distribution, about 14 million customers in Delhi, Mumbai, Ajmer and Orissa. Like on the positive side, the solar module prices have in fact reduced recently well. Thermal coal prices have corrected sharply from above $400 to it's below $200 now. So this is another major positive. Earnings were decent. I won't say it was excellent. It was decent. But then for FY25, I'm expecting an EPS of about 13. And with that, I'm looking at a price of about 260.
Okay. Ambrish, do you look at Mahindra CIE? The stock has been getting re-rated every time the Mahindras have sold stake. They sold stake in March. They sold about 6%. They were left with 3.2%. Again, today they've gone ahead and sold. And now they've completely exited. But the stock continues to rally. In fact, this year it's up close to about 38%. Why is the street so happy that the Mahindras have, completely exited and now it's owned by the CIE group of Spain? What's the story here?
No, because if you see the last about a year plus, they have been minority shareholders, and it was expected that they'll keep selling. And the market was fearing that pressure to come in. So as and when they kept selling, I think markets found a reason to buy into that stock because, the performance has been good, should continue to, be excellent even going ahead. So I would say that even at the current levels, it's a decent buy because now since they've exited completely, there'll be no further selling pressure from the promoter side or the ex-promoter side. So I think we should see much higher levels.
Okay. Got that. Mahindra CIA, and they've managed to do the deal at a nice, tidy premium. They sold some stake, I think, 2-3 months ago. What they've done now is at almost a 25-26% premium. So just has worked really well in terms of that block. Amrish, before we let you go today, there are, interestingly, on such a weak day, there are two government-owned companies that are doing well. Engineers India as well as NBCC. Any interest in these two at all, or anything else from the CPSE space?
No, in fact, I had recommended both these stocks quite some time back, but they were underperformers. So finally, I think people would have seen that the story is actually playing out well, looking at the sort of order book position for NBCC as well as EIL. I think that's what should play out at least over the next 4 to 6 quarters, because the execution has been extremely good. In fact, we had a price target for Engineers India of 120, but looking at the way the momentum is there in the stock, possibly it can go beyond that. For NBCC, I have a target of about 48 in the short term and about 58 and 74 in the slightly longer term. When I say longer term, I'm talking of the next 18 months to 24 months.
You had, I think in April when you joined us, Amrish, Narayana Hrudayalaya is one of your picks. It's done well over the last 5 or 6 days post results. Any thoughts?
Yeah, I think there's some side. I think I'd given a price target of about 860 or so, but I think it should go beyond that. Possibly we should see levels of about 940 to 980.
Okay, all right, Amrish, I think it's time for us to take your leave on that note. Thank you very much for joining in. Always good talking to you. And thank you for the stock ideas shared today as well. Well, as we're setting up to wind down the day, it will classify as a disappointing one, because once again, this level of 18,400 has proven to be way too formidable for the bulls. You can have several reasons. Today, it was more of global action that kept the market subdued. But we are ending not quite at the lowest point of the day, so that's some solace, about 30 points off the lows. But nonetheless, it is a 60-point drop on the index. A lot of it because of the selling that we've seen in bank names today. So just about 3 minutes to go. Just to talk about some of the losers on the way down, an HDFC Bank is really quite a big one. That's right at the bottom of the heap. ICICI Bank is keeping it company from the banking space. Even Kotak Mahindra Bank was quite weak. You had a lot of biggies, Reliance, L&T, Lever. So tough for the bulls to really fight against this kind of an onslaught when your key big, top 5 weight names on the index are all trending down. By the way, today, even the Adani group of stocks sold off after that mega rally that we've seen earlier in the week. Adani Enterprises down 6%, Ports was down 2%, and some of the others were on the weak side of the screen as well. There was a rush to the defensive, so Sun Pharma, Dr. Reddy's, even ITC for that matter, about 1 to 2.5% on most of these stocks. Titan found a little bit of buying. Cipla, again, talking about pharma, Cipla did well as well. But otherwise, I guess, folks, weak day, and it's back to watching the global screens, which we'd kind of stopped doing because of all the earnings action here at home.
And today you're going to get the minutes of the May Fed meeting, so that's going to be quite crucial. But at least the mid-cap index had a green tape on it. The mid-cap index is up nearly about 0.25%, though the advanced decline ratio is marginally in favor of the losing side. So we've got about 15 more stocks which closed in the red. Some of the big earnings reaction on the way up: Schneider Electric 13.5% higher, Sudarshan Chemicals up close to about 10.5%, Dixon strong numbers, stock rallied 7%, and this is over and above the 10-15% rally it had over the last couple of days. Metro Brands, the top line was good, margins were a bit subdued, but the stock saw buying and it ended up with a gain of about 5.5%. And some other earnings reaction in the mid-cap space include Linde India, Gabriel, CMS Info. Other notable winners include Deepak Nitrite on the back of their 5,000 crore capex plan, and Mahindra CIA after Mahindra & Mahindra sold a 3.2% stake. On the losing side, Polyplex, that took a big knock of more than 8% after the promoters entered into an agreement to sell close to about 24% stake to another entity, an external investor. So the street is a bit disappointed. Cummins commentary was soft, stock down 5.5%. Sequence Scientific, Amara Raja Batteries, Thyrocare, Ashok Leyland, despite good numbers, also ending marginally soft. So Ashok Leyland down close to about 0.8%. But, Prashant, the headline looks pretty listless, but there was so much action today on the way up and then on the way down.
Yeah, no, I mean, Rima, by the end of it, almost, although market breadth was 1:1, and you read out a few names, I have to say that the advantage is still with winners, because the number of stocks which went up with volumes, it far outnumbers, dwarfs the number of stocks which fell on large volumes. And when you read price action, you've got to look at it alongside volumes, and that I think was very clearly on the with the bulls, if you want to call it that, once again. I mean, the headline index neither here nor there, and until and unless you get a close under the 20-day moving average, which is still about 100 points off, I don't think you can kind of ride the opportunity on this rally. You'll still have to treat this as a pullback, congestion within a broader uptrend. So that's the level to watch, the 20-day, as we've been pointing out for some time. But for now, it's a 60-point lower close. It's also goodbye from all of us here on the Closing Bell team. Thanks very much for staying with us. But there's more coming up on the other side.